Hi, let's talk about Lordstown Motors. It's a company that operates as an automotive company, which market cap is reaching 1 billion. The company, unfortunately, is unprofitable and not forecasted to become profitable in the next 3 years. Also, they have volatile share price, and pretty much over the year, so we've seen the peak within the year frame, highest point, mid-February, $31 per share, and since that day dropped, I guess this was the peak, 78% in return, in minus side. So pretty big volatility. Snowflake analyze shows there's only health, which is 6 out of 6. Other parameters are only valuation 1 out of 6. Others 0.0 out of 6. Latest share price and events, they had pretty much the legal issues, which has decreased the stock, and I guess they printed their shares out. So this is diluting the shareholder equity. 2019, 68 million of stocks out. 2020, 96 million out. And last 12 months, 148 millions of shares are out. And they unfortunately have no revenue. So this is affecting very negatively on the stock price. Somehow there's no 1 year return, but anyway, 90 days return is almost minus 50%. Of course, it's not beating the industry, neither the market. And valuation side, so Simple Wall Street does not have any price targets. TipRanks has $9.17. That is meaning 38% upside. So the analyzed rating consensus showing that there's a 1 buyer, 3 holding, and 3 selling. By the way, in 12-month scenario, in good scenario, there could be reaching $20, which is analyzed price target within 12 months. And let's check the market watch, which has pretty similar. So stock price target in good scenarios $20 per share, in bad scenarios $1 per share. So there's the volatility and there's the gradation on the stock price. Future growth for the company is forecasted almost 60% that the earning will grow annually. They have this kind of decreasing side in the earning, but we'll be checking this later. Earnings per share also is forecasted that it might grow, but it's not forecasted straightly that they could become profitable, but there's an analyzed EPS range which is showing possibilities that the company could be profitable within actually 2.5 years. So December 2023, there's this minus 0.9 till $0.2 per share. And past performance, so last year's earning growth decreased by over 1,700%. That is meaning that they had reported the earnings 50 million back in 2019, and currently they have minus 337 million. And of course, it's not profitable business currently. Financial health side, I think they have no debt. The company is debt free, but they need to print and somehow to finance the operatings they need to invest in the product. They need a lot of salaries going on, and the money is running out, as we see here. So they had back in December 2020, 629 million, and currently it's almost double, half of the price, 365 million. And yeah, they did not have debt within 5 years. Balance sheet of course looks green since they have no debt. They're not paying dividends, and if we check the management and only to the insider transactions, yeah, so there's mostly individuals that are selling. There is also one significant of amount, 60 million were sold by member of the directors. Independent director sold a lot of shares, I would say, that last year's October. Ownership breakdown, we see institutions holding 34%, insiders 28%, public general public holding 27%, and private companies less than 10%. We see on the top shareholder side, mostly there's an increasing. Vanguard increased 20%, BlackRock 360 almost %, and only 3 companies decreased the stock from their portfolios. And Finviz shows that it's a highly volatile share price, which is trending short term down. But there's a big but. Because of the volumes are getting high, the price increased significantly in today's trading day. So today's volume 108 million, and it actually went within few days. Actually, I think it doubles within few days if we open the month frame. No, somehow only 38%. But the lowest point where, yeah, the highest point went today 7.79, and the lowest point back in August, for example, 18 or 19, lowest point 4.77. Not exactly the doubles, but anyway, the volumes are getting high, and there's if there would be good news, of course it could bounce to those previous levels. But since the company printing all the time shares out, which dilutes the shareholder equity, of course they somehow need to finance their operating cash flows. That is definitely needed rather than debt. So if they would take in the depth, there is a possibility that it could affect negatively on the business, because there's an interest rate and other things. Anyway, 1 year return we see here minus 58%, 5 year return minus 31%. And investing.com summary the stock for long-term investors as a strong sell, moving average strong sell, and technical indicators as a sell. Thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.